Hello, everyone. Welcome back to Crypto Cash. Thank you so much for joining me here today. This is your one-stop shop for cryptocurrency analysis, among many other things. We're taking a look here today at HEGIC. Could be HEGIC. I'm not quite sure, honestly. I've been looking at this one for some time. It just recently took off. A lot of my alerts and notifications just kind of went crazy here. And I did also have a lot of my community members asking that I cover this here, a lot of direct messages. So thank you so much for requesting that I cover this coin. Now, moving forward, I'm not a financial advisor. This is for educational purposes only. You should do your own research and make sure that you always take ownership of your own trades and just learn as much as you can from as many people as possible. Don't take my word as gospel. Even though I do have a very high success rate, I average about 80% success in all of my trades, I'm still not the bee's knees, right? There's definitely a lot you can learn. You want to take your own philosophy because everyone has different risk tolerances. However, if you are interested in more of an autopilot where you just kind of like to jump into trades based on successful trading skill sets, then I do have a Patreon account, link in the description below. Check that out in your own time, of course. Highly recommend, obviously, subscribing because, simply put, we all have a very good time and it's a very good community. You can learn a lot, but also make a lot of money too. So thankfully, we've all been very profitable in this process. So thank you so much to my current subscribers. You know who you are. I can't thank you enough. Thank you. All right, so without further ado, why don't we just go ahead and jump right into it. I do tend to ramble sometimes. I sincerely apologize for future reference. Well, let's just go ahead and get right to it. Let's check it out. All right, folks, let's go ahead and take a look here at HEGIC. And just before we do, we always look at Bitcoin and Ethereum first to get a baseline in the market because it really just helps to understand that. Sometimes it doesn't apply, but most of the times it does, in the sense that Bitcoin controls the market. Obviously, 90% of all the coins went down recently, and I think a lot of us lost about 20% overnight. So that's unfortunate, but we want to understand what that looks like too, so we can properly understand moving forward how to invest. But also the ERC20 blockchain, a lot of coins are on there. So, Ethereum is also a very good thing to look at. All right, so let's go ahead and take a look here. And just to preface, I use TradingView.com desktop application is essentially the paid versions. Recommend that as well for you, just based on the fact that you can follow along, or more importantly, just benefit greatly from all the indicators that you can have present at any given time. More than 2 is helpful. That's why I use a paid version. Otherwise, the free version, you kind of got to keep disabling and enabling different indicators. It gets a little tedious if you're doing this day in and day out. So link in the description below for a free month worth of subscription. See if you like it or not. That being said, let's go ahead and take a look here at Bitcoin first. Now, to preface here as well, when it comes to Bitcoin and these little red squares, if you see those here, I just highlighted for my community members, my patrons, that I do constant analysis on Bitcoin for them. And the whole point is to make sure we kind of get perspective on what's going on. Looking at Bitcoin, if you look at this here, these squares, these are Mondays and Tuesdays worth of price action. Basically, if you look, I think it was 5 out of 6, I believe now. 5 out of 6 of the last Mondays and Tuesdays have been red days. In other words, the weekend, the price gets inflated over the weekend because consumers like you and I are increasing the price, at least in a bull market, that's what happens. And then, of course, Monday, Tuesday comes around. The whales jump in and they take their profits and drive the price straight down. So they're the ones controlling the market. Therefore, it's important to understand what they're doing. So I oftentimes urge caution on Mondays and Tuesdays. We had a holiday here, but obviously a D-Day yesterday, as we can see that right there, plain as day. A good, I think it was 18.9% in one 24-hour period. Actually, it was more like 8 hours that happened, but still, who's counting, right? So either way, I just want to make sure you're aware of that. Let's go and take a look here at the simple moving averages. Obviously, we're well below those based on the simple fact that those didn't even matter. No support and resistance levels mattered yesterday. Right? I'm sorry, El Salvador. We can just call this the El Salvador candle, but that just happens, right? Unfortunately, we didn't have any control over it, and support and resistance levels matter nothing when that happens. But for now, moving forward, that's what we want to try to rely on because they are fairly self-sufficient. I mean, if you look back here, these channels, they're holding true in a lot of ways. So, a lot of times you can just buy the bottom close to support, right out to the top, take your profits, rinse and repeat. But right now, we're kind of in a lower quadrant here. So we basically have a zone of between 44,000 and 46,800. So that's essentially where we're at. Again, major resistance at 46,800. That was a previous support for some time. And it'll likely work as a resistance for a little while here until Bitcoin breaks out to the upside and that becomes a support. Therefore, we're going to be between 46.8 and 50,000 once we break that, right? Just bear in mind we got both moving averages to kind of working against us. I don't think those will matter as much based on the fact that Bitcoin should continue to progress. I mean, if you look at this, you compare, September with most months, most other Septembers, it's usually a bloodbath. September is a typical retracement month. So this isn't, abnormal by any means, but if you compare this with 2013, it's almost identical in that sense. So I think it's a very strong chance that October, November, we're going to see a pretty significant increase in Ethereum and all the altcoins as well, including Bitcoin, of course. That has to move for everything else to move too. Anyway, that's kind of where we're at there with Bitcoin. Ethereum is very similar in a lot of ways too. It responded almost the exact same. It's recovered a lot better than Bitcoin because Bitcoin was basically down here if you kind of compare them side to side. But the bottom line here is we got a resistance at about 35.50. That was a previous support, and we'll see what happens with that. Good news is the price held above the previous support as well here, the secondary support at 32.50. You can see that there when it retraced back down, held above, nice and tight. So all in all, we're over the 200, below the 50, and we got a major resistance of 35.50 coming up here. Once it breaks, we could be back on track rather, up to 4,000 as the potential goal there. All right, or 41.50 as the major all-time high on the one-day chart. That's where it closed. So let's take a look here at HEGIC. And I hope I'm pronouncing this correctly. I apologize if I'm not. I have looked at this before, of course, just in my own way, prior to even starting this channel. And I thought it was interesting. I didn't invest just based on the fact that it was on the downside once I started looking at it. Because when Bitcoin was doing well, right? For example, Bitcoin is doing very well in this time frame. It had some significant retracement and pretty much just went down. So I didn't really bother with it. I'm not big on shorting, so I didn't care about that at the time. But now, if we can kind of see here, there's a significant amount of volume. Obviously today, we'll talk about that in a minute. But look here, back here on July 23rd, that's when Bitcoin jumped up past 30,000, right? Bitcoin went to 29.5 or something like that, and then bounced past 30. And that is essentially what we're looking at here. So all the volume started to kind of flow back in here as soon as the bull market came into play, right? So coins like these, Loopring I think is another one. They kind of came alive after the Bitcoin hit its major support level and bounced back, right? So just keep that in mind. A lot of coins like this are essentially performing similarly. This one has a lot of random spikes. Now the previous spikes have just kind of all retraced 50, 60, 70% of the way back down. This one hasn't done that yet. Obviously, we're still a little early. We'll look at smaller time frames to identify and kind of see what happens, but the bottom line here is that the price is over both 200 and the 50-day simple moving average. We have only 2 hours left in this trading period, so there's a strong likelihood this one-day chart will close either above or at the previous resistance of 31 cents. So mark your charts. 31 cents is a major resistance. And how I got that too is just you look back here at the one-day chart. They hit this twice in a row, 2 days in a row here, and it had a major resistance. That was the most recent high, essentially, that it needs to work past. Obviously, we'll worry about the other stuff here in a bit, but for the most part, that's the major resistance. This next major, of course, if we break and it keeps going on a tear, we're looking at about 58 cents as the previous all-time high. All right, RSI is up over 70, kind of standard there. We had a MACD convergence here today, also very normal. So nothing we really need to worry about. What we do want to look at here, though, is a 4-hour chart and see if we have any support levels. We have one right there. Just in case the price does come back down and start to retrace, we can rely on approximately 24 cents as a major support level. And how I got that, pretty obvious. You can just see where it topped out right here. So for 8 hours in a row, you can see that worked as a resistance, pushed the price down, and then came back up above. So if this candlestick closes below 31 cents, then we can go ahead and assume that it's going to work itself into a channel in between 24 and 31 cents. Okay, so it might do that. It may even continue to do that regardless, because it might close above this candlestick up here and then kind of test that support level and break. We're not sure yet. It's hard to say specifically, but there's tons of volume. There's a chance this could continue to leg up. So we'll look at the smaller time frames to identify if this is a good, healthy bull run or what kind of pattern we're looking at. But all things here point up for obvious reasons, and it really is a significant increase in just under 16 hours. So thanks again, Rose, for recommending that I cover this. I really do appreciate that. You're one of my favorite patrons. In fact, all my patrons are favorites. So disregard I said that. But you've been communicating very well, and I do appreciate your insights and just curiosity in learning more about crypto. So let's go ahead and take a look here. This is a 1 hour chart. Let's go ahead and identify first of all, and this is going to be an obvious yes, but the price is above the Ishimoku cloud. Oftentimes you want to kind of look for a price when it breaks above the cloud. That's usually a buy signal. So if you're new to the channel, the 1 hour chart Ishimoku cloud is a very good indicator to how to keep things simple, in the sense that when it's above, it's a buy signal, below it's a sell signal, and essentially in between, you don't want to consider investing. Just keep in mind, this has low volume for the most part. I mean, yes, tremendous amount of volume here in the last 24 hours, but traditionally low volume. And therefore, when you have lower volume, you might have a lot more consolidation periods. It can kind of be difficult to gauge. Now that it's taken off, obviously there's a good chance it might continue to progress upwards, as it's doing another push here, even since starting this recording. But the bottom line is you want to be careful and kind of honor that code with the Ishimoku cloud. Now let's take a look at TD sequential. We probably had a reset, and we're looking, yep. Because here's a cool thing about the cloud. It kind of, TD sequential. TD sequential helps us understand market exhaustion. So when the price is moving upwards, right? You take the fourth previous candlestick. If it's below the current candlestick, it continues to count up until it hits a 9. Now when it hits a 9, it resets. Now this increase right here is so sharp, so fast, that it pretty much is straight up consolidated since then. Slight retracement, slight consolidation, but the bottom line is it didn't really continue to count upwards. But if we get this to continue to count, just say this continues upwards like it's doing, then what it'll do is it'll hypothetically count all the way up until 9 and then retrace or reset at that point. Now again, it's not a foolproof plan, but here, let me give you an example here that you can kind of see this right here. So looking at this guy right here, you see a 1 all the way down to a 9. In other words, that's the period of retracement, of course, where it's counting up until a 9. When you see the 9, it essentially resets because it's hit a state of consolidation, and it starts counting up and down until it finds its direction, right? So periods of consolidation, TD sequential doesn't really help very much, but once you have like these kind of higher highs and higher lows and things continue upwards, then you can use it a little more effectively. Right now it's kind of null and void. We got a reset there with this consolidation, which is healthy, but we're at a 3 right now, and we need to kind of be, hopefully, I mean, I obviously want to be closer to an 8 or a 9, but this is actually fantastic because this could mean that we're early in the bull run. We might see more continuation here to the upside. In fact, that is very likely considering its history. All right, so we got a major resistance here / support about 24. And again, potential support here at 31 cents. So we'll see here in a couple of hours how this continues to respond. But this current candlestick is looking very good. Another thing we want to look at, of course, is kind of like a traditional bull run and how healthy this could be. Now this is good in a sense because even though this sharply increased right here, right? You see it came over and it came up again. Right? So hypothetically, if we can continue to do this staircase pattern, we could see, just continuing to go up and up and up. That's what we want to see. We want to have a healthy run like that. So to me, normally I'd be concerned about this really sharp increase right here in this small amount of time. But the fact that it went sideways right after that and then ramped up again is perfect. Like any good bull run has a chance to recover. Like, this isn't a marathon, this is a sprint, right? Or no, correction, other way around. What we saw here was a sprint. So in order to marathon this race, right, to get to the end, which is essentially beating its previous all-time high, we need it to be able to continue to smoothly increase, right? We don't want it to just kind of jump out the gates and then fall off the tracks because it's winded. We want it to continue upwards, right? So this is a nice smooth consideration here. So what I'm hoping for is the price kind of levels out here in just a little while at 31 cents, kind of rides that support, recovers for just say 12 to 24 hours, and then goes on another leg up and continuously increases its price. Okay, so that's kind of what we're looking for. That's what we want to see. Will it happen? Hard to say specifically, but it does have the history of doing very well, right? Let's just take a quick look here. Previous all-time high, 58 cents, and we're only at 32. So the likelihood of the price continuing upwards to its previous all-time high is fairly high, but the likelihood of it doing it today is very low, right? At least if we want it to continue to do that. Because even if you look back here when it was at its peak, right, it went from 28 cents to even the highest point of 65 cents in a matter of 5 days. So I'm venturing to guess if we look closer here, this probably has some nice, healthy patterns in it, right? That's what we want to see here today. Okay, so it's all well and good that it increased, what is it, 125%, somewhere in that range? Hold on, I messed that up. Let's see. I think it was 125. Okay, 165 from bottom to top in a 24-hour period. It hasn't even finished yet, right? So in 22 hours, we've seen 168%, increase from the bottom to the top, right? So that's pretty interesting. That's very, very significant. So, again, more often than not, coins retrace about 50% of the way from where they came. So there is a strong likelihood that this support level here will work as a resistance, and then it'll move down to 24 cents, and that will probably be a bounce off of support there. But bear in mind too, it has a lot of momentum right now. It's kind of a healthy bull run. Therefore, it could very well continue. I mean, we are only 3 hours into this push. This push very well could continue upwards, to break that and to kind of hold above, right? It could even go up to about 36, 37 cents. So my prediction in the next couple months is that HEGIC will test its previous all-time high. I don't have any doubt in my mind that that'll happen, just based on the way that these coins are performing and the fact that Bitcoin is still very much in a bull market, especially if you compare it with a 4-year cycle versus 2013 to now. Bitcoin is on target to take off next month. So just keep those things in mind, of course. Either way, let's go ahead and go take a quick look at the 15-minute chart and see if we can see anything different. Not much different here from the 1 hour. Traditionally, I would enable EMA and VWAP, but it's going to just be exaggerated. The price is way high, and that doesn't really help us too much. I mean, usually I use the VWAP, which is a volume weighted average price. It's the blue line here that's kind of moving along with the price. It tells us what the price should be based on the volume. So the amount of volume in the last 24 hours, the price should be about 25 cents. And when that deviation gets too high, that standard deviation gets too far, which was what at its highest point, roughly about 32, 34%, it has to come back down. So I would not be surprised if this little push right here kind of fails or just comes back down closer to the VWAP, because it needs time to average out, right? That's why we see back here, this is kind of actually healthy because it went all the way up, then it goes sideways for some time. I'm really hoping that we get this price to come up and just go sideways, or even stay where it's at right now, right? I get it to go sideways right here. That'd be great. So if we lose that and kind of come in this channel, it'll kind of bounce around for a little while and maybe take its time if that works as a resistance. So we want that to break, but we also don't want it to break too hard because we want the more comfortable run. Again, there's a strong chance the price will continue upwards even past this point, but the key takeaway here is if you're in the profit, say you're in the green, you got in around 11, 18 cents, whatever, move your stop loss up to at least somewhere in the range of about 24 cents so you can take your profits while you still can. Because there's nothing worse than losing out on money that's on the table, right? Like, I like to use, I don't know, I have a lot of analogies, I guess, but probably a better way to describe it is in my own personal experience. There's been tons of times when I've been in the green and I've been not necessarily a diamond hand holder, but somebody that actually holds on for way too long, and then the price comes back down past support and I start losing money, right? And then you start, panic selling and things just get out of hand. Why not take your profits while you still can? Leaving money on the table is stupid. Get the money while you still can. If you are 2, 3, 4x right now, dude, cash out and take some profits. Yes, it could very well 10x someday. We don't know what that looks like. Maybe just at least trim half of your position and then add to your position when the price comes back down and test the support. I do that all the time nowadays and it works out fantastic. Again, as long as you understand what the support and resistance levels are. Bear this in mind. Just note this. This has not closed above this resistance level. So even though it might look like 31 cents is a support level right now, it isn't yet. Okay? Because again, the one-day chart, this was established on the one-day chart, and that was the most recent high that it couldn't pass. Therefore, we have to honor that as a resistance level until that passes. Therefore, in the next 2 hours, if you're watching this after 5 p.m. Pacific Standard Time and that candlestick closed above 31 cents, then you can consider that as a support level, move your stop loss to that point or just below, and then continue to pay attention. Heaven forbid you get stopped out, you just add to your position later and it's perfectly fine. But you took your profit, you made your money, and that's the important thing. That's what trading is all about. I mean, it's all well and good to be a diamond hand holder or somebody that actually holds on for dear life. That's perfectly fine, because someday it might be worth a ton of money. There's no doubt about that. But between now and then, if you never cash out, you're never going to take profit, right? And it could very well come back down and you lose all your profits. So it's kind of it depends on who you ask. I am constantly profitable. I have about an 80% success rate because I constantly move my stop loss up once I'm in the profit. So I usually take some profit, move my stop loss up to break even. Heaven forbid I get stopped out, I took my profits, right? There's a lot of different ways you can kind of look at it, but everything you just learned here today, I share with my community members. So just bear that in mind. I want you to check that out if you get a chance. I have a Patreon account where I actually have a lot of subscribers every month that, we all work together essentially to find good, effective ways of trading. More importantly, I share all of my trading skills with my community members. Link in the description below. Check that out in your own time. But without further ado, I don't want to kind of just keep rambling on, kind of divulging too much best practice here, because there's not enough time in this video, of course. But the takeaway here: respect their support and resistance levels. If the price breaks below 31 cents in the next, just say 2 hours, and the candlestick cannot close above, be prepared for a retracement down to 24 cents. If it closes above, there's a strong chance it could work as a support moving forward. It will have some retracement, perhaps, of course, it kind of has to, but it'll likely just continue sideways until it gets its next leg up. But without, if you're going to take anything away from this, take your profits while you still can. Move your stop loss up to ensure you take profits if it comes back down on you, okay? Can't say I didn't tell you so. But I hope you have a good rest of your day. Thank you so much for your time. We'll look forward to seeing the next video. Take care. Thank you.